Hi, good morning. I'm Anne Marie Batten. I'm a local insurance agent, Batten Insurance Services, and we're here today to talk about all of the different products that are available for life, retirement, protect your assets, long-term care, permanent, and all of that. I am here with my partner today, Penny Wimberly-Davis. Thank you so much for coming. I can't wait to get started on this conversation.
Thank you for having me.
Can you fill us in a little bit about why people would want to have life insurance? Why would you want to consider that?
So what's important about life insurance is understanding its primary purpose. A lot of people kind of miss that and they don't understand the most important thing about it is kind of determining your future human life value. That's your ability to earn income in the future. And so what I do is I introduce them to that number and then kind of show them how to protect that. I kind of liken it to if you're at home and you have your family at night, you don't live with your door open for anyone to come in at night. You close it and you protect it. So I do the same thing. I show them how they can protect their family and that future income by applying the different types of life insurance based on their budget and what works and most appropriate for them.
So when you talk about different types of life insurance, I know lots of times when people hear that word, they're like, oh, that doesn't apply to me. That's not something I want to think about. That's something long-term down the line. When you say different types, give me an idea of what you mean by that.
So they have categories. They have temporaries that are called term, and they also have permanent types of insurance. And those insurance have real-time benefits known as cash value that you can actually use for different purposes, school, retirement. So it's actually something that's in it for them while they're living. And then the death benefit protection is there to be able to have for your family. So it depends on what your scenario would be, what we're covering, the importance of it, the length of time, and I help educate and navigate them through both of those areas.
So one of the things you really take into consideration is the overall asset somebody has and actually what their future asset potential looks like so that you can kind of gauge what particular product might look good for them.
Correct. A young family that has a home, they have a long-term commitment, for insurance. So they've got the children, they've got the mortgage. But as we get older, get into our golden years, your need for the insurance might not be as large. So we would be looking for something on a smaller scale, but something that is going to take them until they're no longer here.
Which that brings me to a really interesting point when you talk about getting into the golden years. Cost of healthcare, cost of assisted living, cost of all of those extra things. There are policies out there that are designed to protect. People don't usually start thinking about that until way down the line. So talk to me about your opinion on long-term care. Where do you see that fitting into a financial plan for someone?
So I'm glad you asked that question. A lot of people don't think about extended care plan, and it's really deciding what is going to happen. What is your family's game plan when you live and you are no longer able to take care of yourself? What is most important is making sure that that burden doesn't fall on your family. So there are strategies, there are products that you can use in order to be able to meet that goal. Essentially, it's having a plan for income to be able to take care of those expenses, like a healthcare provider coming in, or if you're looking at an actual facility outside of your home. The family has to make that decision, but you don't want to tap into your retirement income or your Social Security because you're using that. And so if you don't have a plan for that, it could basically upheaval, your retirement.
Could be some really big expenses of taking on your parents' care or a relative, an older relative's care.
Correct.
When's a good time, like age group wise, for people to start really thinking about, do I need that? And when should you start making a plan for that, bringing the family together to talk about what that looks like?
So the golden years are going to be 40 and 50. You really want to take a look at that because at that point, you are kind of that sandwich generation. Your kids are getting older. They're either in college or going to college. And you have parents that are getting older as well. So if something happens and you have to take care of a parent, you fall into a really tight place, and so you want to
your kids still plus your parents.
Exactly. So you want to make sure that for yourself, you put something in place like that because you're able to lock in. You're healthier. a very good plan so that when you could need it in the future in your 60s, 70s, or even 80s, you would have locked in that price at your younger age around 40 or 50. But it's not to say that if you are in your 60s or 70s and you want to explore that, then we have unique hybrid programs, and there's some strategies with regards to moving assets around that you can accomplish and meet that goal, even if you have some pre-existing conditions.
There are some really cool hybrid products out there.
Yes.
You and I have talked at great length about them.
Yes.
So definitely something that I'm looking into right now and considering, because I happen to be in that particular space with kids and aging parents.
Yes.
So let's flip back around. People don't like to talk about life insurance.
Correct.
So there's a lot of ways in which you can approach it to make it more palatable. What would be something that you would talk about if you were recommending a permanent product? Like, what would be the benefits of that? I kind of know from the liability side that it shades you from liability. The cash asset that grows there
Yes.
is protected from any kind of outside sources. But talk a little bit about why that would be something that you would consider for the right person.
So let's just take, for example, a business owner like yourself. 90% of the time you are focused on growing that business, taking care of the day-to-day, and a lot of times you don't have the ability to focus on protecting your personal assets, your personal family. So I come in and I'll talk to them about a permanent plan that they can put in place that could accomplish several things. They have several riders that can protect the income. They have the ability for the cash to grow, such as investments, So there are a lot of strategies for business owners that they can put something like that in place, and they'll also have some tax advantages that are very unique in terms of the creation of that type of a program and the execution of receiving the cash value in a favorable manner. So I kind of sit down, look at what your overall liabilities are, and then we look to the future to say, once you retire, we could actually exactly. We could actually tailor it so that you could, siphon some additional supplemental income and it be a win-win situation. So I try and educate you to understand that, yes, it is important to put the insurance in place to protect the family, but there are some very key rules here where you can benefit from the cash value long term, and then it makes it a win-win.
I feel like we should have another conversation and get really in depth on that piece of it, because there's so many people that don't really understand where that whole piece of the puzzle comes in, your financial planning part of it. But I think that would be a good thing to hit really hard.
Absolutely.
So let's go back to the more basic policy again. So that would be
Your
would
term.
recommend would be your term policy.
Correct.
And who would be a good candidate for that?
So anybody that is young, anyone that has a family and a mortgage, normally in your 20s and 30s, you're starting out, and so you're kind of easing into your career. The term is going to be the cheapest type of insurance. You can get a large amount of insurance. The price is going to be locked in for a set amount of time, and that works to your benefit. Sometimes you can have a layering effect, but the term is there to be able to handle a specific debt for a set amount of time. And that is the, single or young family that is looking to grow and establish themselves. It's important to put that in. In addition to, even if you have insurance at the job, you still want to make sure that you have a personal plan outside of that, because most people don't anticipate that whether you leave the job voluntarily or involuntarily, that policy exactly. So you always want to have that coverage in place and lock it in. Correct.
That's a good. There was always an old school rule of thumb to get the most amount of coverage for the longest amount of time that you can afford. How do you feel about that when you talk about the term policies?
So the term policy does serve a purpose. What is nice about that is you can put the term in, but they have a very unique rider privilege that's called a conversion privilege. So you can start out with the term in the very beginning, but have the ability to turn some of it over into a permanent plan later on in life. So the strategic planning of life insurance, you can start off with the lesser expensive term and then graduate and turn it over into the permanent. At some point, you are leaving here, and so you have a higher asset liability in the very beginning years, but towards the end, you do want to make sure that you have something to put to take care of that final expense. And so that's where that strategic planning comes into play, starting with the term and then going into a permanent, but a lower amount too, so that your family doesn't have that burden.
You could go into a bunch of stories. Like, we both have stories about how these particular policies have played in. You have a personal story, I have a personal story. I'm going to share one now about a friend of mine who wishes that she had bought the insurance policy from us when we talked to her about it. Very sad story. She was driving home and was making a turn into her neighborhood, and there was a motor vehicle accident actually into her own driveway, and her 11-year-old daughter was killed in the accident.
Wow.
So you don't think about getting life insurance necessarily for somebody that young.
Correct.
But in hindsight, what she said to me was, that would have given me the time to grieve and not have to worry about working.
Yes.
So when you think about life insurance for a really young person, there's other reasons for that too. So
Correct.
I feel like some part of that message needs to get out, that it isn't just for those big things too. It could be for something. I mean, if she had a $100,000 policy, that could have bought her wages for a year
Correct.
or two, where she wouldn't have had to worry about getting right back to work.
Correct.
So how do you approach those subjects with the younger people?
It's a sensitive topic, but it's a topic that you have to have with parents. No one wants to think that they would outlive their child. But there are a couple of ways in which it could be covered. One would be a rider that an adult, a parent could put on for their child until they're 18. Or you could actually purchase a policy for a child at a very young age, as young as 1, and then they can have it locked in until 60, 70, whatever you're comfortable with. So it's going to come down to what is affordable for them in terms of a budget, but I always do address, we want to make sure that everybody in the household is covered, whether you're a young person or an older person. We want to make sure that you don't have to worry about that. And that is something that I think a lot of parents don't think about, but I make sure that I bring it to their attention.
I wouldn't want to have that conversation when my kids were young. So, I see the value of it, of course, now, because I've had so many significant stories pass since my kids were
Right.
born. But I think one of the things that you're hitting on very important here, and it's what makes insurance not necessarily a commodity, regardless of what line of business, if it's auto, is you have to get to know your person.
Yes.
You have to understand what you're protecting. What does that person really have? And so many clients have it as a consumer-based product where I want to get the cheapest price.
Right.
That might not necessarily be in your best interest if you don't have the whole story. So getting to build that relationship by having deeper conversations, it sounds like that's the key to making sure that people are really adequately protected across the board.
Yes.
Whether it's their home, mortgage protection in that case, their auto, we all know what could happen there.
Yes.
Motorcycle, people don't even think about golf cart situations. So there's a lot of things where things could go wrong that this particular types of policies would take into place.
That is correct.
Penny, thank you so much for coming in today. This is a subject that's so near and dear to both of our hearts. We've experienced so many things where this is applicable, where people had the coverage, people didn't have the coverage. So I think the message is pretty clear today about establishing those relationships. Thank you so much for coming in.